In its brief statement issued on the 14th of October 2021, GNPC indicated that the purchase price for the 7% interest is $199 million at the effective date of 1st April 2021. This was reduced to $165 million after the closing adjustments made in October 2021. GNPC has been silent about its financing plans. In the case of Cosmos Energy, the company issued a detailed statement to investors and communicated how it intends to finance its $550 million acquisition price, that is, getting a bridge financing of $400 million from Barclays and Standard Chartered, and the balance from its cash reserves. In the absence of official information on financing options from GNPC, speculations have become rife. In October 2021, Africa Intelligence reported that GRA, and by extension, the Finance Ministry, intends to lend the tax settlement amount from the Oxy transaction to GNPC to offset the acquisition cost of the 7% interest with no recourse to the Petroleum Revenue Management Act. The PRMA, since its inception, has suffered many accountability challenges. But for any revenue to be encumbered outside the express dictates of the law will be the final nail in the coffin of the Act, a precedent that will undermine the very existence of the Act. There is no individual, institution, or authority clothed with the power to appropriate petroleum revenues outside the PRMA, even if the Act can be justified as necessary. Should the Finance Ministry lend to GNPC? The answer is a simple no. In the current economic context of high interest rates and the weak primary balance of the country, a more optimal and innovative approach to financing the 7% interest is required. ACEP appreciates that GNPC is broke and its weak financial position exposes it to high cost of capital. However, given that the Jubilee and 10 fields are producing assets, they could be leveraged, especially through credit-worthy partners, to finance the acquisition. Any percentage of savings through innovative approaches is better than using tax revenue needed for the national budget in an austere period. Borrowing by the Finance Ministry at a higher cost for GNPC will not reflect the difficult picture on revenue painted by the 2022 budget. Now, the interesting point about holding the 7% interest in a tax haven. In the official communication to announce the acquisition of the 7% interest in Jubilee and 10, GNPC indicated that, and I quote, "The interest acquired will be transferred to GNPC's subsidiary, the GNPC Exploration and Production Company, GNPC Exploco. With this acquisition, GNPC Exploco will become part of the contractor group for the two blocks, together with Talo, Petro SA, and Cosmos Energy," unquote. However, ACEP can confirm that the corporation is not assigning the interest to Exploco. GNPC, at the time of communicating to the public, knew that its intention was to assign the interest to a company called Jubilee Oil Holdings Limited, registered in the Cayman Islands, with Dr. KK Sapon and Mr. Freddie Blay as directors. ACEP's search has not yet ascertained the beneficial owners of Jubilee Oil Holdings. It is important to note that the representation of the CEO and board chair of GNPC with their names in the General Registry of Cayman Islands is not enough proof that GNPC is the owner of Jubilee Oil Holdings. However, in the absence of evidence on shareholders of Jubilee Oil Holdings, we proceed with the assumption that GNPC owns the company. While the corporation has not provided public information on the strategic essence of this approach, the unofficial explanation received by ACEP indicates that the corporation intends to use the offshore company to pay off the loans for the acquisition before the interest reverts to Exploco. This is to avert disbursement uncertainties from the Finance Ministry in compliance with the PRMA. In other words, GNPC cannot trust the Ministry of Finance to make available part of the proceeds from the additional 7% interest to amortize the loan. This has created a situation where the corporation wants to live unto itself, not the law and the nation's strategy for its existence, by avoiding the Ministry of Finance and the PRMA. Paradoxically, the Ministry of Finance, which is supposed to be the defender of the PRMA, is an active participant in the ongoing process.